What's up, everybody? What's going on? I know it's been a while since I made a video, but we're going to get straight into it because it's not going to be a long video. As I said before, I have a kid. It's kind of been a little bit busy here and there. So this video is going to be basically about how to stop yourself from getting faked out using volume, and volume the key to indicating if you should enter a trade or not, of course with candlesticks and trusting the zones that you have in place. So for example, let's look at gold. One of the key things I want to look back on was this play right here. We had a break above this zone right here. This is a key zone. You can see it touched right here, blew past this, broke out, went to the upside. And if I scroll back all the way, it would be a key zone that has to do with probably since I think it was like March or probably the beginning of April, this zone right here of last year. So it's a strong zone, and this is exactly what happened with it. We came here, broke back above, and then we started to consolidate. The thing is it broke below, and we came back up, and we broke back above. So the issue with this break back above is the fact that volume started to kick into the upside. As you can see here, right here, volume started to kick in. So this is an indication to me that really bulls are not so much in control. It's more bears are taking positions. As the price goes up, they keep taking position. Price goes up, they take position. We get another attempt to go back up again. Volume kicks in for that time of the day. That's a lot of volume. Remember, when I look at volume bars, I look at what is the time of the day and how is it relevant to the previous 2 days before. You can check out my other videos on that. And another key thing is to watch out for, you'll see high volume come in when you have news events. So I think right here, this was a news event right here. This amount of volume that came in on this drop. The drop, also showed a lot of volume in. So why also, for example, to the opposite side, why not take this trade with this high amount of volume that we haven't had since, I don't know, probably last year if I go back all the way. This amount of volume that came in on this day on February 26th, why not take the trade? Because we didn't have confirmation. The reason that I wouldn't take this trade right here for a long position is two things. We didn't have confirmation on the next candle. And then the second thing is this area right here is all empty space, all the way even back. There is no confirmation to get into that trade right there. It could be just profit taking, the fact that we went back up, and it could be position entering. So it could be bears letting the sell-off go, and the price starts to rise because of that. So they're not selling no longer into the down trend. So to one little keynote to let a lot of new traders understand something. What moves the market is market makers, institutions, smart money, banks, governments. Of course, governments are not in that realm of selling and buying, but governments move the markets as far as currencies, if they devaluate, blah, 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 this kind of stuff. But let's stick with institutions. So when institutions come and they are, let's say, in a downtrend and they are looking to sell, so looking to short, they will not just take a position up here, for example, and sell and just like, oh yes, it's going down, I'm so grateful that I'm not gonna get out of my position until it reaches a point. No, they'll keep selling. Wherever they gain opportunity, they'll keep selling until they get to the point where they want to get to. So for example, they sold heavily in this area, so they pushed it down, came back up, fake to the top, of course, as usual it'll do, and they keep selling back again. So they sold right here on this volume, you can see increase, and you had confirmation on the next candle that they are selling. Every time it goes up a little bit, they'll sell more. Goes up a little bit, they'll sell more. And then when you see a clear push down like that, that means they heavily sold right here to take out all stops. So if they sell like this into a down move and you're getting confirmation after confirmation that they're still selling, so you're getting a lot of bear bars, a lot of red candles, this is not some buying opportunity when it goes back up. This is not some buying opportunity right here at all. This is basically the institutions when they're getting into this point right here and heavy sell-off right here. Once it starts to retrace, that does not mean that they're going the opposite, they're going long. No, that means they're just letting the sell-off stop. So they stop selling. And newer institutions, newer retail traders, whatever you want to call it, start to come into the market, and they let them ride as much as they want until they get a certain price that they care about. So which is in this area right here, they came back and sold again. As you can see, volume started to increase up there, and they sold back off again. Continue the process as we've been doing for the past week or so. So again, the last thing I want to say is always look for volume for when it comes to fake breakouts, and at the same time fake sell-offs or fake retracements, or continually going against the trend, because for a lot of new traders the trend is going to be your best bet how to trade something, and not try to catch the bottom or the top, which I'll tell you right now, anybody on YouTube that says that institutions don't do that, the institutions catch bottoms and tops. But the difference is, so for example, this right here, I'll talk about it in another video, but really quickly, this right here, for example, was the top of this year. So in January 5th, this was the top right here. That does not mean that this is only the top for them. No, all this area right here is the top for them. All of this. This is the top. They catch these tops and then they keep riding them as much as they want. Lets it go up, they'll keep riding it as much as they want. Remember, institutions trade on quarterlies and do not trade on, something about trying to make a quick buck. It's about quarterlies. Doesn't mean they don't take profit. It just means that they're looking for a certain area until they start going opposite for long positions. And with that said, please subscribe, like, share this video. Helps me out a lot. And last thing I would like to say is I'm probably going to start doing a sort of series about FTMO, and maybe getting into it as far as documenting what I would do when I get into it. And peace out.